In this video, we're going to cover candlestick patterns for beginners. So we're going to talk about bullish, bearish, and reversal candlestick patterns. So my name is Tyler Stokes from StokesTrades.com. I'm on a journey to become a full-time day trader, and we're at the stage now where we're studying technical analysis. Now, if you'd like to download my 6-month blueprint that outlines everything that I've done in the first 6 months, you can find a link to that below this video, and it's 100% free. So here, what we want to do is we want to cover the most popular candlestick patterns. So we're not going to cover all of them, but these are going to be some of the more common ones that you're going to encounter and need to learn. So as a beginner, learning all the ins and outs of trading, I know that it can feel, overwhelming to grasp everything and to, study all the information that you need to learn. But just know that every successful trader has faced this challenge and they have emerged stronger. And one crucial skill that every successful trader has is the ability to identify these key candlestick patterns. So that's what we're going to do in this video. Again, we're not going to cover them all. I think there's probably around 40 of them. We're just going to cover some of the more popular ones. And again, we've categorized them into bullish, bearish, and reversal patterns. So here they are on the screen, and we're going to go through each of them in this video. Now, what I would recommend that you do is consider going over to TradingView, and there's a link below this video where you can get a free account with TradingView. And basically, it's kind of good to learn these patterns and then come to a real chart and see if you can notice any of them. So here I've just got the Bitcoin chart up, and there's a Tweezer Bottom here. We're going to cover that one right here. So that's a reversal pattern. So, Bitcoin may have bottomed out at 55,000 there, and now it's sort of on an upward trend. You can learn about, bullish engulfing candlesticks as well. You can see some of them on real charts. So TradingView, I think, is a good software for you to use. Here we're on the weekly time frame. Candlestick patterns can be used on weekly time frames, but also they're quite popular on the daily time frame as well. And then one other resource, if you don't have an account on X, I would recommend that you get one. You can come to X and you can kind of just search any candlestick pattern. You're often going to see some posts or threads about them, and sometimes they show real patterns that are actually emerging on some real charts, not just sort of diagrams or graphics. So those are two references or resources that I would sort of recommend that you use when you are studying and sort of memorizing these candlestick patterns. So the first one we're going to cover here is the bullish engulfing candlestick. Now, I would actually just recommend one other thing. We have a post that we've done on sort of how to read candlestick patterns, and here it is. Just make sure that you have some basics on how to read a candlestick. So, the green or white, that is a bullish candlestick, and then the red or black color, that is a bearish candlestick. And basically, with a green candlestick, the open is shown here at the bottom of the candlestick, and then it closed higher. So the price went up and closed. That is why the candlestick green is green. And then the wicks, or the shadows or the hairs, these are these lines on the top of the candlesticks, and that is the lowest that the price went during the given time frame. So this candlestick, again, could represent a single day, could represent 15 minutes, it could represent a week or a month, and so on. So that's the lowest point, and then the wick on the top is the highest that the stock went, and then it closed there at the top. And then a red candlestick means that it opened on this price, but price went down and it closed lower than it opened, and that's why it's red. So again, just important to actually understand some of those basics before you actually start reading some actual patterns. So again, here we go. The first one here is this bullish engulfing pattern. So this occurs in a downtrend, and it's characterized by a large green bullish candlestick that completely engulfs the previous day's small red one. So we can see here we're in a downtrend, and then here you have a bullish green candlestick that completely engulfs this one, and that is an indication. It might suggest that a potential reversal is in place, and buyers may have overtaken sellers, and the trend might change. So again, key features there. It appears in a downtrend. A large green candlestick engulfs the previous day's smaller red candlestick. It signals that a shift from sellers to buyers might be taking place. So again, this pattern indicates buying pressure may have overwhelmed selling pressure, suggesting a possible reversal. So that's a bullish candlestick pattern. And again, here in this article, which you can find below this video, I've just got some good posts from X, so you can kind of click here and learn more about this particular pattern. I see some actual images from live charts from some of these people that are posting on X. So moving on to the morning star candlestick pattern. So this one is a 3 candlestick pattern that indicates a potential bottom in a downtrend. So similar to the bullish engulfing downtrend, this is a bullish pattern that's indicating we might be on a trend sort of reversal here. So basically it consists of a long bearish candlestick followed by a short or a doji candlestick, and we'll talk about that one. So a smaller candlestick, and then followed by a long bullish candlestick that closes well into the first candlestick's body. So basically here it is. It's sort of like a U-shaped, and again, there's not absolute perfectness with how these are formed. Sometimes this candlestick is quite small, and the positions or the sizes of these are not always exact, but you get this U sort of shape with this morning star candlestick pattern. So appears in a downtrend. First candlestick is typically a long bearish one. The second candlestick is a smaller, shorter one, sometimes a doji candle. And the third candlestick is generally a long bullish one. So again, this interpretation, it means that the pattern is suggesting that the downward momentum is potentially weakening and a reversal to an uptrend may be on the rise. And then here we've got some posts from X that show this. And this particular one is good. If you're reading this stuff from a textbook, you're going to see that you've got a bearish candle, a doji, and then a small, and then a bullish candle. When in reality, the actual sizes of some of these are going to change and they're not going to be perfect. So this is kind of a good diagram there to see that, all of these are morning star candlesticks, even though, they might not be exact as you would see in a textbook. The next one we have is 3 white soldiers, or green soldiers. So this one is a pattern made up of 3 consecutive long green bullish candlesticks with small or no shadows, and each closing higher than the previous. So you've got a higher highs and lower lows within the actual day, and that is a 3 white candlestick. That's a positive bullish trending candlestick. Appears in after a downtrend. 3 consecutive long green candlesticks. So that's indicating that this pattern is a strong buying pressure, potential reversal from a downtrend into an uptrend. So that could be a good time if a strategy that you're using is suggesting that you might want to buy into that trend. So here we've got, again, some more posts about this on X for you to look over. Next, we have the hammer candlestick. So a hammer forms after a downtrend and has a small body with a long lower shadow and little to no upper shadow. So here you can see, price came down here all the way down. It touched down here, so it dropped, but there was enough buying pressure to bring it back up and actually create in this particular instance, it was a green day, so it finished higher than when it started. Sometimes these candles can be red. So you can have a red hammer candlestick, and then this is still going to potentially play out into an area where the price is going to rise. So key features, again, after a downtrend, small body, long lower candlestick, little to no upper shadow. And again, it can be green or red in this particular case. And then here on X, if you want to reference this, we've got some good examples here of a hammer candlestick on this particular security. And then you can always go and check TradingView again to see how this actually played out, or see if you run into some examples on X showing hammer candles for particular stocks or securities. You can go to X and kind of see if that trend actually played out. So that's another good way to sort of learn these patterns. Next, we have another popular one called the piercing line candlestick. So this consists of a long bearish, so red candlestick, followed by a green candlestick that opens lower but closes above the midpoint of the red candlestick. So here we can see, you've got a red candlestick, and then, in the pre-market or after hours, it's gone down lower. So it opens lower, but it actually rises and the price is going to finish. So the close is here, and it's above the midpoint of the previous day or the previous time frames red candlestick pattern. So this again suggests a potential reversal in a downtrend. So again, this closing price is higher than the halfway point of the previous bearish candlestick. So again, key features: appears in a downtrend. First candlestick is long, second one is long and bullish, and then the second candlestick opens lower but closes above the midpoint of the first one. So that's a piercing line candlestick pattern. And again, some good references on X explaining these even further. Next, we have an inverted hammer. So the inverted hammer again appears in a downtrend, small body with a long upper shadow and little to no lower shadow. So it's basically a hammer, but inverted. So you've got the price going down there, and the high point was here, but it closed there. So potentially not as bullish as a hammer, but still a good sign that the trend might be reversing and potentially bullish moving forward. So again, with all of these, they appear after a downtrend, small body, long upper shadow, little to no lower shadow. And here we've got some good posts on X. You can see here this particular one. I think this is for a crypto currency and showing a hammer. And you can go and see how that did after that was in place. Okay, so those are some of the popular bullish candlestick patterns that you're going to notice, and potentially many of them are signaling that the bearish trend might be turning into a bullish trend. So now we're going to cover just some of the popular bearish candlestick patterns. So the first one is similar to the first one we covered for the bullish, and that would be a bearish engulfing candlestick. So it's sort of the opposite of the bullish engulfing candlestick. So it occurs in an uptrend characterized by a large red candlestick here that engulfs the previous green candlestick in the price action here. The pattern suggests a potential reversal of sellers may have overtaken buyers in this particular price action that's going on. So again, it appears in an uptrend, large red candlestick engulfs the previous day's smaller red candlestick. So it suggests that a downtrend could be happening. The next one here is an evening star. So again, it's sort of the reverse of the morning star. So it's more of an N-shaped rather than the morning star was a U-shaped, and it sort of follows the same patterns there. So it indicates a potential top in an uptrend. So the pattern consists of a long bullish candlestick followed by a short bearish candlestick or doji candle there that sort of gaps up, and then followed by a long bearish candlestick that closes well into the first body. So it's going to open here and close here well into the first one in this three candlestick pattern. So again, appears in an uptrend. The first candlestick is long and bullish. Second candlestick is short or potentially a doji candle stick. And the third is a long bearish one. So the next one on our list is the three black crows. So similar to the three white soldiers, we've got three candlesticks in a row, lower lows, bearish candlesticks there, made up of three consecutive long black or red candlesticks. This pattern again suggests that it is appearing after an uptrend, suggesting a strong reversal pattern. So it's basically the opposite of the three white soldiers. And again, we've got some good posts here on X showing this. In this, I believe this is a solar company here, three red crows right there, and potentially having this reversal pattern now coming and appearing more of a downtrend following those that specific pattern. Here we've got a hanging man. So this forms after an uptrend, has a small body with a long lower shadow, a little to no upper shadow. And this pattern indicates that the market may have reached a top as sellers managed to push the prices down after a period of buying. So appears after an uptrend, small body, long lower shadow, little to no upper shadow. So again, that's hanging man. It sort of just looks like that particular graphic, and it basically suggesting that a top or reversal to the downtrend if followed by a bearish confirmation. And here we've got another post on X demonstrating this. So that's Hanging Man. That's another bearish candlestick pattern. Dark cloud cover is another popular one. So this particular one, it consists of a long bullish green candlestick followed by a red bearish candlestick that opens higher but closes below the midpoint of the green candlestick. So it's sort of similar to the piercing line. It's sort of like the opposite of the piercing line. So we've got a green candlestick here, and we're going to open here, and we're going to close here. So the prices come down, and we close below the 50% level, below the midpoint of the previous green day. So that's a dark cloud cover, suggesting that a reversal might be happening. Then the source for this image is here, and this is actually a good site that covers this particular candlestick pattern extremely well. And we've got some other posts here on X about that. So that's a dark cloud cover. Here's a graphic of it there. So we've got, a bullish candlestick followed by a, opens higher but closes below the midpoint, could be indicating that the trend is reversing. And then we've got shooting star, another bearish one here. Shooting star appears after an uptrend as a small body with a long upper shadow. A little to no lower shadow indicates that buyers tried to push the prices higher, but were resisted, suggesting potential bearish reversal if followed again by more bearish confirmation afterwards. So appears after an uptrend, small body, long upper shadow. So that's a shooting star pattern. And here we can see a nice graphic of it here, shooting star, and then following by this bearish engulfing candlestick here, indicating that the trend in this security could be going down. So those are some popular bearish candlestick patterns that are important to memorize and important to learn, check out on the charts. Now we're going to lastly just cover a few reversal candlestick patterns. So the Doji, we sort of talked about this one a few times in that morning star and evening star here. And these form when the opening and the closing prices are virtually equal or very, very small. So, the price opens and closes here, opens and closes there, very much the same. And then what's going to be different is just the lengths of the shadows here. So the lengths of the shadows, they can vary. Dojis can indicate indecision in the market and can signal a potential reversal when appearing after some sort of strong trend. So basically, the buyers and sellers, we don't know what's happening. Indecision is sort of goes high, goes potentially low, and then ends where it sort of opens. So indecision here. The gravestone is where it appears with a higher wick on the top. Long-legged is basically in the middle, and then a dragonfly doji is with the lower wick there, a larger lower wick there. So again, opening and closing prices are virtually equal, very small body, length of the shadows can vary. And again, this suggests indecision and a potential reversal if found at the end of a strong trend. This particular post on X about PayPal highlights several doji candles in the price action of PayPal, and they sort of coincide with a change in the trend. So that's a real good one to reference if you want to kind of see some real examples of the doji candle in action. Next, we have spinning top. So the spinning top candlestick patterns, you can be bearish or you can be bullish. And again, the bearish one will appear in an uptrend, it's signaling a downtrend, and then a bullish one will appear in a downtrend, signaling a uptrend. So these have small bodies with upper and lower shadows, longer than the body, and the body color is relatively unimportant. So it could be bearish or bullish. The candlestick suggests indecision, potential reversals if found at the end of a trend. So sort of like a larger doji candle there. And then again, posts on X, we've got some examples of these spinning tops. Next, we have a tweezer bottom and a tweezer top. So at the bottom, that's a bullish sign. And then at the top of a trend, that could be a bearish sign. The tweezer top, this particular one, bearish, occurs at the uptrend and is characterized by two or more candlesticks with matching highs. And then again, the bottom would just be matching sort of lows. And if we jumped over to this example that I showed earlier, we can see the tweezer bottom here happening in Bitcoin here. Again, these are weekly candlesticks, but we've got a potential tweezer. Well, we do have a tweezer bottom there, and potentially, the price of Bitcoin could be on the rise. So that's one good candlestick pattern there, and a live example here. We're mid-July shooting this video, and Bitcoin could be on the rise from a low in the mid 50s there. So that's a good example of a tweezer bottom. Another popular one that we will want to memorize and understand and see some examples. So it's tweezer bottoms and tweezer tops, and we've got some other examples here from X showing these particular examples. And then lastly, we have the Harami, the bullish and bearish Harami. And basically, this is a 2 candlestick pattern that occurs in a downtrend for the bullish. The first candlestick is a long red bearish one, and then followed by a small green bearish one, green bullish candlestick that is contained within the first one. So, a bullish engulfing candlestick would mean that this green one would engulf this red one, and that's a sign of a trend. But this particular one, Harami, means that this green candlestick pattern is found within the previous day or the previous time frames bearish candlestick, and it indicates a potential reversal. So it appears in a downtrend. First candlestick is long and bearish. Second candlestick is small and bullish, contained within the first one. So that is the Harami. And again, the bearish one is just going to be the opposite of that. And this particular post here on X shows some good examples of bearish Haramis and for Amazon and Google and so on. And here's some actual charts that you can check out as well. So those are some of the more popular candlestick patterns for us beginners that are just sort of learning this. Here's the kind of chart here we have here. There are others. We haven't covered all of them here. These are some of the more popular ones. I'm personally going to learn and sort of memorize, study these first. Go to TradingView and try and find some of these in some live charts. And then as you continue to study technical analysis and you continue to day trade and just be around this material more and more and more, you're probably going to come across even more candlestick patterns. But it's good to know some foundational ones, and many of these are clear, good indicators that the reversal in the trends could be happening. Now, again, technical analysis certainly is not foolproof, but there are many, many examples where these patterns do repeat themselves and do indicate that the forecasting could potentially go a certain way. So something that every trader, whether you're day trade, whether you end up swing trading or just investing, it's good to get a core understanding of some of these candlestick patterns. So thanks so much for watching. Subscribe to the channel, and I will see you in the next video.